Hey, this is Ken Finn at Capital Advantage Tutoring. And you always hear me talking about Achievable all the time. But what I did was I got the founders on, and I'm going to bring Brandon on after that. So you're actually going to see the guys behind this absolutely fantastic product. So guys, welcome on Tyler York and Justin Pinkar. How are you guys doing?
Hi, we're doing great. How are you?
Good. Okay. So let's just get into it instead of wasting people talking to me. Let's hear about you. So Tyler and Justin, so what's your background? How did you come up with this? What's going on with you guys?
Yeah, that's a great question. So Justin and I met at Carnegie Mellon University, and we're actually roommates for 2 years.
Okay.
And so we always, when we were roommates, we always knew that we wanted to start something together and work together. And we actually started a couple like small little startups right around sort of the end of college and first year outside of college.
How'd they do,
Um,
by the way? What went on with those things?
One of them was a daily deal site for food.
Okay.
And then Gilt was like a really well-funded competitor, launched and immediately crushed us. They like
Okay.
stole all of our merchants. And then the other was an ad network. And then we realized that people that are in the digital ads business is kind of an awful business in a lot of ways. So we were like, okay, we don't really want to be in these spaces. We tried a couple things. We learned a lot, made some money, not like a ton of money, but we were successful to a point. Let's go learn, right? Let's go our separate ways and kind of figure out what we want to do. And then we can always reunite later, and we always wanted to. So when Justin approached me, I was all in. And Justin will kind of get to his part of like why he wanted to start Achievable in a bit. Basically, my claim to fame is that I ran marketing for a franchise called MLB Tap Sports Baseball for 2 years,
Okay.
and grew its revenue from 73 to 103 million
Wow.
in
That's
that
insane.
time. Yeah. It was a big team effort, right? I'm not trying to take credit for all that, but it definitely, I mean, Glue, which is a company that owned that game, was acquired by Electronic Arts last year for $2.3 billion.
So let's go into so after that one, where did you come right to this from there, or did you do something in between that?
Yeah. So actually, this is a good like full background story. So Justin and I started Achievable. We had found this problem, which he'll get into about, essentially the pass rate for the Series 7 back then was 65% nationally.
Yep.
There was no SIE that was launched in 2018.
Yep.
And so we essentially like we saw this huge problem, right? Where a third of the people weren't passing this test. And it's a test that is a lot of just like you need to memorize this stuff. And that's kind of it, right? You need to know how to do option spreads and some other math things, but it is a lot of memorization. And it looked like the current tools weren't really equipped to do that well.
Right.
Right. Back in when we even
Onerous,
started.
big books, a lot of it was all cookie cutter stuff. No, I get it.
Yeah, and it was all like PDFs
Right.
online almost. Like especially the mobile apps were non-existent or really
Oh,
bad.
they're still not great.
Yeah,
So
they're still not great in 2022. So we were like, hey, there's an opportunity here. We know that there's a serious pain point. We know that it's costing people their jobs, which is really like something we want to help with. And we're both passionate about education. So then we worked on it for 2 years. We basically completely bootstrapped it and went into credit card debt trying to start it.
right.
And still paying that off today. and we basically just like, we went all in, and because it was Series 7 back then, you had to be sponsored. It was all corporate clients. So we signed 3 of the top 10 wealth management firms in the country for pilots.
Right.
Um,
Hard to get
and
into them sometimes. Those guys are hard. Those people are hard to break through. That's awesome.
Nobody in New York City can understand how 2 kids from San Francisco were able to get these customers. And
Right.
there were like lots of phone calls. And what we found was in a controlled study with 250 students, 125 of which didn't use Achievable, 125 of which use Achievable for 8 minutes a day.
Okay.
The group with Achievable scored 8% higher, or sorry,
Okay.
15% higher on
Okay.
all of their sections of the Finner Series 7. Though when the SIE came out, that kind of shook everything up. And we had, our corporate clients were like, hey, like now that the SIE is out, like we think the Series 7 is probably going to be a bit easier, like the top off will be more manageable.
Right.
So we're going to discontinue working with you. And we kind of looked at it, we were like, okay, so we're back to square one. We know that the SIE is going to be an exam that anybody could take, and we know that we have the best product on the market. So can we take this product and build it for the SIE and build it essentially from like the customer's point of view. So then we relaunched that early 2019. We brought on Brandon as our partner because we knew that having like his excellent expertise and content was going to make a big
He's amazing.
difference. I
Right.
had to go back to work, right? And so
Right.
Justin, so we were nights and weekends on this thing,
Right.
and it grew like a weed. Like, we basically, it's like had no lives. We're putting all of our extra time into
Well,
it.
it's a need. I mean, because
Yeah,
people need good SIE and not everyone can afford to pay $400 for a program. So,
yeah.
okay. So Tyler, we got your story. Now, Justin, what happened? What's your track to this one?
Yeah, well, so as Tyler said, we were roommates in Carnegie Mellon. I studied computer science and also user experience.
Okay.
So right after college, I knew I wanted to do startups. I joined a bigger startup called AdMob. It was an ad company. It was fine. It was really interesting. I got to work on big projects, really, really huge scale, serving systems that did over 1 billion impressions per day. And then Google bought AdMob, and so I got to kind of see all of that at Google. And it was really exciting.
Over with it. How was that?
Yeah.
How was that transition?
It was cool because we got to see, how Google did things. Google is a huge, it's kind of a startup, but not really. It's a huge company.
Startup vibe with billions of dollars.
Yeah.
Right.
So I got to see, how they do things operationally, how they do it at scale. But at the end of the day, I am a startup guy. So,
Right.
and I was like employee number 100, so it wasn't like a huge, payday for me. But so that was it. I stayed at Google for about a year and then had the startup bug, started those couple small companies that Tyler mentioned.
Right.
Went off, did my own things. But then I think, what's more notable and relevant to Achievable is I kind of fell in love with education.
Okay.
Actually, from day one, I kind of wanted to be a teacher, but I realized that unfortunately teachers do not make a ton of money, which is why I decided to be an engineer instead.
That's smart.
But then I found myself just being pulled to all these ed tech companies, which, basically we implemented a different way at Achievable. That was kind of the genesis of Achievable. I learned about these really cool techniques where you can really like fundamentally model someone's memory, understand what they know, and then provide them study material specifically based on that.
Wow.
So Sergo had these really, really super cool tools. They worked with textbook publishers, like the really big ones. If you go out to buy a book, you're probably getting it from Cengage, Elsevier, McGraw-Hill. Right. And there's a good chance that it has a Sergo program that you can buy along with it. And it was great. You got to see what you know, you can learn it, you can study them in kind of this memory tracked fashion. But it was also a little bit confusing on how to use. The students would get the book, they get this content, they get this great app, but then they're like, okay, but now what? Right? We were handing them these great tools, but it wasn't really clear what they did. And so, I saw that and I was like, hey, maybe there's an opportunity to take some of the content in-house, make a really, really clear, consistent learning journey where they basically, you just have to show up and the platform and the site takes care of the rest of it for you. So I pitched that to Sergo, but Sergo really wanted to be a pure platform play. That was their vision. That was totally fine. But so it was at that point when I was like, look, you want to do that, but I have my own idea. Right. So I ended my notice, called up Tyler, and we were off to the races. Okay. And so that's what Achievable is basically founded on today is, you show up, we put the content in front of you, we give you a really clear path from start to finish. And as long as you actually put in the work, you're going to pass.
We have this SIE, the 7, and we have the 63, 65, 66, and the 6 is coming soon. Essentially, like our philosophy is that Achievable's platform will work for almost any type of content. And so we are thinking about it that way. But FINRA is really our bread and butter, and it's where we have most of our focus.
Do you guys code yourself? You write all the stuff, or do you have an outside person doing it, or how hands-on are you guys with the background stuff, like setting up the plan and all that?
I am the one-man army who's made all of our marketing websites and product websites. Okay. Yeah, and that's why it's really helpful though, because I'm also the one who responds to most of the customer support phone calls and emails. And so whenever someone says, "Hey, this isn't broken," or sorry, "This isn't working," or even if it's just confusing, we really take that to heart. So yeah, we want it to be the best product, period, and we want it to work for everyone, right? So if something is confusing, that means that we didn't explain it right, and that's just our core philosophy. Yeah.
Okay, so you talked about how you do the adaptive stuff. So what other things make you better than STC, Kaplan, PastPerfect, all those other ones? Well, how are you different?
I think, so our system has two main modes. I guess we suggest that you first go and read the content, and that's a lot like what you might expect a normal book. We think our content is really good. It's easy to understand. When we get people saying this line is confusing, we rewrite it. So the content is great by itself. But what makes it more interesting is that we have every single page, every little topic in the textbook linked to review quizzes. And so the idea is you read that page and then you can immediately quiz yourself and make sure that you really retained it, because that's the battle here. You're not just trying to read the book, you're trying to pass it on test day, which is, 2 weeks, 4 weeks, 6 weeks later, right? And so as you come back and you study with us, we also reschedule those quizzes for review based on how you've done. So it's super, super hyper personalized. We're not just comparing you to
if you
Joe
don't
or
do
Jill.
well on one, it comes back and hits you more with others.
That's right. And it'll be personalized exactly to you. So
Okay.
if you are particularly struggling with call options or something really nitty gritty, you're going to see it a lot more often. But if you know your retirement plans really well, we're going to get it out of the way so that we'll hit you again with it in a couple of weeks. But it's not going to be wasting your time. You can focus on what you're doing.
Oh, you actually shocked me. I did not know that.
And so that is the sort of the output of everything Justin just said, is
Right.
that you get better results in less time.
One of the really cool ways we do that is with our dynamic questions. So, normally you got a quiz bank and you have like a couple thousand questions or whatever. And just to make it really simple, let's say we're talking about an option spread and they might have fixed values, right? There's a strike price of 42 and a premium of 3 and so and so.
Right.
The next time you see that question, even if you got it wrong, you're going to kind of remember, oh yeah, I think the answer had a 5 in it. Your brain kind of holds on to this.
Right.
But so what we do is we have those questions, we templatize them and randomize them. So every time you'll see a different version of that question with a different strike price, a different premium, and you can actually go and solve it again.
So what's coming up next? What test are you coming up with next?
Yeah, so the big one is Series 6, which we're really excited to do. And that kind of rounds out most of what I would call the core suite for a lot of firms. And so we're excited about that. And then we're going to be doing a focus on more videos.
Good.
It's something that we've gotten a lot of feedback on. Basically, I mean, Brandon's videos are great. He has a YouTube channel as well, which you can.
We'll talk to him about that one.
Talk to him about that one. But we just want, people want more of them.
So, what has been the biggest hurdle? What's the biggest thing that's been hurting you, slowing you down, your roadblock, whatever you want to call it?
Yeah, the number one thing is that when people try us, they love us. And so it's just trying to get as many people to try our courses as possible, right? We have a free, not just a free trial, but it's a free trial, go wherever you want. But we're one of the first dedicated new FINRA test prep companies in a while. Right. And so it's a space where kind of the old players have really kind of dug in and everybody's got their people that they use, particularly on the corporate end.
Yeah, but everyone's getting older. So hopefully that's what happens. They get older and all of a sudden the little deals they had or the naked pictures they had of somebody. Don't worry, I'm not putting this one in. But the whole point is I probably will now because I'm making myself laugh. I mean, they have some connections with these firms and they're not good. I'm telling you, every person I send there, I even had one girl. I'm not going to say her name, but she came back, young kid, and she said, you sound like you're selling it. She said, it kind of turned me off. But then she tried it, and I guess she emailed you guys. And now she's one of your biggest proponents because she said, you should stop sounding like you're selling it. I said, it's good. There are vendors who go, yeah, use STC, use Kaplan, use Achievable. I have zero issue telling somebody because I've never had it come back to me as bad. And I've had people come back to me and other vendors. I mean, STC and Kaplan are the big ones, right? But then you guys are a third of the price and as good, if not better. I think you're better. I mean, I've told everyone the SIE, you blow the doors off. There's no one else who can come close to it.
I mean, it is also part of our core philosophy in general is trying to make these tests passable for anybody from any background.
So I thought somebody mentioned, you guys have a community group going on or something where there's a chat. Is it a chat? I don't know. I haven't looked into it. So what is that?
Yeah, so it's talk.achievable.me. And it's a forum just for Achievable users and anyone else who's interested and wants to be a part of it.
Okay.
It's basically it's like the sort of the subreddits that are focused on FINRA.
Oh, that's great. You know what? I love talking to you guys. It was great. It was a lot of fun.
Yeah, thank you.
Thank you for coming on. Let me go get Brandon. So, okay, guys, we're back with, we got Brandon now. Guys, I have 8 followers, right? So we got Brandon on here, the genius behind the questions of Achievable. He'll never say that to himself, but I think he's awesome what he does.
No, I won't.
He runs he does the questions. He also has his own YouTube channel, Basic Wisdom, which is super entertaining. And I see him putting out more videos lately, which is good, which we always need more good content, more entertaining, so we don't fall asleep. So we're going to ask a couple questions, see how he does and what's going on. So tell me a little bit about yourself. What's your background? Where you just start, stuff like that.
Yeah. Thanks, Ken. And I appreciate the great intro there. But yeah, I guess how far do we go back?
Fifth grade, maybe we'll start at fifth.
Yeah. Well, how about that? Finance didn't really come into my purview until roughly about college. I actually went to college expecting to become a medical doctor. I was biology, pre-med, all that stuff. I got to organic chemistry, and it just like, okay, there's no way I'm ever going to understand this stuff, and kind of on a whim switched to business, specifically finance.
Okay,
and just realized I really liked what I was learning. It was, I thought the stock market was fascinating. I thought, people look at money in different ways, but to me, money is a way for people to save for anything related to retirement or, their kids' education or to start their own business. Money makes the world go round. Yeah. Right. I found the whole concept of everything related to it fascinating.
So what year did you graduate?
Graduated 2007, right before the big mess.
Summer to walk into the business. I get it.
Exactly. Summer 2007 was when I graduated, and then I joined on to Fidelity shortly after, about a month after I graduated. So I always say it was the calm before the storm is when I got in. I got licensed shortly afterward, and then right into 2008 into. I just remember asking myself a couple times that year, did I make the right decision getting into this industry? I mean, going into the worst financial crisis we've seen since the Great Depression.
Phones? Were you on the
phones?
That's a fun. So you just got your licenses. Hey, I'm new. I'm Brandon. I'm a 23-year-old kid, and I'm getting yelled at by people, right? I mean, I don't know how they were.
Combination of anger and sadness. It would probably describe most of the phone calls I had. I worked in their what they referred to as their personal investing trading unit. So if you called 1-800-FIDELITY and wanted to buy or sell a stock, a mutual fund, or an option, I was the person that took that call. Okay. So yeah, that was that was a interesting. Great learning experience. Now that I look back on it,
the worst time possible. It only gets
absolutely. And I'd say half my phone calls, just like you said, would end up in someone yelling at me or someone crying on the phone. Right. I saw people on random days lose 6 figures in their account, and it was heartbreaking to see. But great experience, like we talked about. And eventually, after about 2.5 years ish of that, I found that I actually had an opportunity to teach. Before I get there, I've been tutoring. I've been teaching people. I tutored a little bit in college here and there. Wow. When I got hired into Fidelity in my new hire class, because I had a finance degree. Right. I ended up taking a couple people under my wing in my class, and I shared the small amount of knowledge I had at that point in time with them. And even when I got up to the job, I found opportunities to teach the new people. We'd have new people come onto our team, and if they had trouble with options or something, I teach them. And then there was an opportunity for a role that we used to call, or the Fidelity used to call, a Series 7 mentor. Applied. Okay. And, I went through the interview process, thought I bombed the interview. They asked me to teach how to put together a bullput spread, and I completely fumbled the entire thing. And the interesting thing was, halfway into my explanation, I realized I was just so nervous, and I kind of lost where I was teaching wise. And I just stopped, and I told the interviewer, hey, I got to be honest with you. I don't exactly know what I'm doing right now. And it was a little bit more professional than that. Right. And I thought at that point I'd failed the interview, but they came back and told me that was actually the reason they hired me, because what they were looking for, they were looking to avoid teachers that would make up stuff off the spot. It wasn't just me. It was a team of 3 people. There was a licensing lead, and then it was myself and another, what we called, mentor. So I guess, I did that for roughly about 2.5 years. And then, and I loved it. At that point in time, I think I was figuring out that teaching is kind of, I don't know, just something about teaching that just kind of flows through my veins. I love it. Right. other than lifeguarding when I was 17 years old, it's the only time that I felt like this is a job, but it doesn't feel like a job.
Right.
I love doing this. So, which means they wanted me to come back to the trading unit, and they had me take my series 9, 10.
Right.
I passed those pretty quickly. And as soon as I passed, they pulled me back to the business, put me on as a supervisor of a team.
Okay.
And just to be 100% transparent with you, I hated the role.
Right.
Ran into a bit of a quarter life crisis at the time.
Right.
Quit my job at Fidelity.
Oh, wow.
Moved to Denver on a whim.
Wow.
And after about
Total
9 months,
change of scenery.
totally changed. I didn't even know if I wanted to stay in finance anymore. I didn't know what I was going to do. I moved out to Denver, and after 9 months of unemployment, I said, hey, like I'm not good when I'm not financially stable.
Right.
So luckily enough, I had an opportunity to join back with Fidelity. Fidelity just opened a brand new office here in the Denver area.
Okay.
And I was part of their second new hire class for their high net worth department.
Okay.
And because I had so much experience with the company and with teaching people how to pass these exams, eventually I was lucky enough to be in a meeting with the director of our training there, and he just gravitated toward me. I think he needed some help bringing up the pass rates in the region there. Right. So right after I got through training, I was on the job for a week, and then they pulled me again into the training department, said, hey, we need you teaching. That evolved eventually into, I became the licensing lead for the entire Denver region. In 2016, in that office, we had a lot of kind of I don't want to use revolutionary, but just a lot of forward-thinking people in that office. And we created a role at the company that they called the virtual mentor role, which is kind of what you and I do today, which is impact people virtually. And back in 2016, this is 4 years before COVID. I mean, no one's thinking that most of the business is teaching stuff in person. So I helped create what they called the virtual mentor role there. And that's in fact, in 2016 is when Achievable, we actually got connected with Achievable. And that's when I met Justin and Tyler. And just we ran a couple pilot programs, found that Achievable was helping our new hires pass the exam to the tune of, I think the numbers were around 8% higher success rate initially.
Higher, I think,
somewhere around that range. And just and that's where I built my relationship with them. Teaching classes in Jacksonville, in Covington, Kentucky, and up in the Northeast,
and they're all.
And I was doing it all virtually. Eventually promoted into what would be considered a director position over licensing. And my job was to manage a team of 14 other trainers who manage their own regional sites. Right. And our job collectively was to get roughly about 2,000 people licensed a year across various different licenses. But around that time when I got the job, I felt like there was a need for me to do this as an entrepreneur. And I knew eventually I was going to leave and start my own business. And in March of 2018, that was my last time at Fidelity. Left Fidelity to start my basic wisdom business. And now fast forward to today, my day-to-day is I usually spend about half my day writing for Achievable, and then the other half of my day running my own basic wisdom business, where I primarily support corporate clients and help them run their licensing programs. A real quick funny story. One of my first clients, I'm in the Mountain Time Zone in Denver, Colorado. He's on the East Coast. I'm happy to find any client I can find. He tells me he can only work with me at 5 o'clock in the morning, East Coast time. 3 o'clock in the morning, my time. So my wife hated me for a couple months. I was supporting him, but he was one of my only clients. And I would wake up at 2:30 in the morning, get ready.
Do what you got to
do what I teach. Yeah. And eventually that evolved into, I built more and more of a book of business. Roughly around end of 2018. I can't remember who reached out to who, but one of us reached out to each other just to see how we were doing. And we found, hey, like we work together at Fidelity. I think we work together pretty well. And I don't know, selfishly for myself, I've always wanted a type of job that would allow me to travel, to work from anywhere. Like, hey, I wrote the SIE primarily in a coffee shop here in Denver. And I kind of like that. That's whatever that jives with me for whatever reason. So
integrate. So when you teach, what's your thought process? What do you do? Like, what's your philosophy on teaching? Like I do Socratic, like I always ask questions, but I don't know how you guys do it.
Yeah, I love the Socratic method. I mean, it's, that's actually one of the first things that licensing lead that I kind of learned a lot from kind of told me. If you're working with someone one-on-one and you're talking most of the time, there's a problem there, right? So I think I'll get back to that here in a second, but you know, I don't know if there's a fancy name to what I do, but I'll go to the name of my business, which is Basic Wisdom. I named it kind of after my philosophy, which is I really believe the key to mastering advanced material, especially the material that's covered up on the exams that we that we talk about, is the mastering the basics, building some basic wisdom and just the fundamentals, the foundations. I think a lot of times we look past that. And in fact, when I was given learning materials in my initial job at Fidelity, I remember thinking like, yeah, geez, I mean, this is giving me the information I need, but it certainly feels like I almost need like a finance degree just to understand what it is they're talking to me about. Like there's a barrier there, right? So I'm big on, let's bring it down, make sure we're really strong on the basics and the fundamentals. And of course, you can just teach material as is, but I'm also really big on, if there's an analogy I can use, I love analogies, and probably even more so.
It stays in your head, absolutely.
Absolutely. I love real world examples.
Right. So the next one is, so think about this. So I've told you a million times, I can't write questions. Sure. Walk me through your process, generally how you come up with a question.
Yeah, definitely. And I think this even might relate a bit to how I write just the reading material as well for Achievable. I mean, the first thing and the most important thing are those outlines that FINRA and NASAA put out there. You know, the FINRA outlines are super detailed. In fact, so detailed that I usually tell most of my clients and students not to even look at the outlines because they get lost in them, right? But that to me, I eat that stuff up. I mean,
if that's great. Yeah,
exactly. If you're telling me that Securities Exchange Act of 1934, Section 17A is what you're testing on, okay, let me pull up the Securities Exchange Act of 1934, find 17A. Okay, it's talking about this there. So first thing, of course, is being real aware of like what they're going to cover. Kind of on the side of that too, I keep really close track of notices that the regulators put out, especially like FINRA notices.
Every Wednesday. Yeah, I know.
Exactly. You know, knowing what's on the top of their mind, it's, you know, that material in terms of the notices they put out probably won't show up on the exam immediately, but I know that there's usually like a 3 to 6 month delay on the things they're focused on real world. And some of that stuff ends up on the exam. Absolutely. So I do believe that if the questions are so incredibly difficult that you lose people along the way, they get just too frustrated and they give up, right? But on the other side of that too, you know, I want to challenge them, and I don't want them to feel, I don't want our clients or customers to feel like, oh, I just saw a bunch of basic questions on this, you know, and they're getting really tough questions on the exam. I want them to be prepared for anything. And maybe the last thing I'll say just real quick about writing questions is the only insight we have, which is I love that we have it. I wish we had it for every single exam, but that SIE practice exam that FINRA put out there gives us a little bit of insight to us in terms of how they word questions and how they, so I try, that's probably my number one guide, especially for the SIE. It does.
So what would you do to like, what, is there anything you would change or anything like with what Achievable is doing or how people study or what, you know, anything?
Yeah. I mean, we've got a lot of updates in the pipeline. I think the biggest one for me is videos. And just, I think that's what a lot of people need. I mean, a lot of people are visual learners. A lot of people feel like they understand it when you talk to them like a human being and you're not talking about it in like a really complicated, complex financial language. Exactly. Right. So for me, in terms of what we're going to try to improve or what I'm going to try to improve with the Achievable material going forward, you know, I'm always searching for good real world examples and how to implement that into the material. So creating more videos, I think, will be the big focus. Right now for me, I'm working on the Series 6. Right. Series 6 is a pretty decent undertaking. Good news is a lot of that stuff I've already, you know, we can kind of borrow from other exams in terms of what we already have, because there's a lot of overlap, say, between some of the exams that we cover. But creating the Series 6, creating more resources, and just overall in general, thinking about new ways to support people going forward. You know, I think of opportunities in terms of, you know, either doing like a co-session with you.
No, it's great. So thanks for coming on. I'm going to run through the product thing at some point, not today, and then we'll go from there. We'll do from this.
Perfect.
Okay, great seeing you again.
Thanks for doing this.
Let's not be strangers. Keep talking to me. I'll talk to you later.
Will do. All right. See ya.
Hey everyone, that was a great interview right there, right? I hope you watched a little bit of it to learn some of the features in the background. Other people started the Achievable. So now I'm going to try to run through to let you guys see how to work this program. I don't even know half the features. We're going to find out together how it is. Truly, I'm about to click on it and I don't know what I'm going to say with the new features. So here we are. This is under the Series 7. So I'm going to look, I'm pretty ready to take this test, don't you think? But we're not going to take a 7 test. We're going to do the SIE today. But look at all these things. We have the dashboard. You can look at the different book, the book stuff, practice exams, little overview on this stuff. So if you have a last minute things to know where to focus on, right? Jump right in. If you want to give some feedback, if you're not happy or you are happy with them, boom, either text them or shoot it in the community here. So here we start with the dashboard, right? So we're looking at this. We're not going to do the 7. We're going to jump to the SIE, but I want you to see how this works. Hold on. Let me warm my hands on the fire a little bit. Now, you have the dashboard. Obviously, you can move along and read, or you can test yourself. They tell you basically can put in here and they can help you come up with a study plan. Let's see what happens. Let's see how this works. Let's say I'm going to take the exam on the 29th. Create a study plan. Boom, look at that. They give you a little study plan on what to do day by day. There you go. I like that. Good stuff. A lot of features coming in here. Now, let's you can look parts of the textbook. You can get a link. Look, if you give a link, you get $10 off. You get a $10 gift card, all that stuff. Some inspirational quotes. And it's telling you what you need to be doing over the next 24 hours. Okay. So then we have the textbook. You can read it, jump to sections, stuff like that. I really like this. Okay. Like say I want to do comment suck. Boom. I hit it. And there we are. And what you do is you roll down. You can watch the video that Brandon, look at that. Lovely Brandon. You roll down to the bottom. You're reading. When you get to the end, you hit complete. That's a long chapter, huh? Lots of reading. You hit complete, boom, and then you hit the next one. And once you hit complete, what happens is that opens up something in here that you can take a test. So again, you can pick 10, 25, 50, or 100 formula. And if you go, oh, you know what? I don't want to take it on random. I can go like this. Click on this. And here we go. Boom. You can check which ones you want to do. And look, you can open it up. Comment suck. I want this. See, I didn't get to that far yet. If I want preferred, I jump to different features. Say I really want to do investment companies, but I only want to do certain topics. You can open it up, drill it down pretty well. Okay, so then we have the practice exam. So those are the finals. You get timed. By the way, the good thing about the finals is that even if you go over, it just saves your spot and then you can jump, right? So let's see. Did I start one? Do I have any? Here, look, I started one. Boom, February 15th. I started one. If I want to know where I can either start over again, right, to where I was, or I can hit jump and then it'll see they're all black, which means I haven't done any yet. But if I did some, look how long ago I did it. Started it 66,000 minutes ago. But I could jump and it'll be black where I haven't done anything yet. Awesome. I'll leave it. I'll get out of that. We have the feedback, which is great. You can get, like, if you have thoughts or suggestions, they're super responsive. You can even text them. And then there's a community, which is kind of cool. Take a little forum where people can talk about stuff and talk about how I'm a jerk and stuff like that. So you can do that. And, you know, there's new stuff all the time. And Brandon and Tyler and Justin are always looking at that stuff and responding if people have problems. Look at all the different categories. So, okay. Now we have how it works. It tells you the method, how they do it, which is fine. Nobody's going to read that, but it's all good. And then we go to the other courses, which what we're going to do. We're going to go take the SIE exam. So in here, it looks the same, the dashboard, all this stuff. Hey, I'm 95% ready. I'm actually more ready for the 7. Also, if you have, look at all the different exams they have too, right? So there's some resources. I didn't see this one. All the videos. Wow, look at him. Shaved, unshaved. Look at that. Look at all the different videos he has. Pretty good stuff. Okay. They have their podcast. Almost as good as my podcast, the Blue Collar Finance, but whatever it is. You can get some tutoring from Brandon. I think there's another one that helps them too. Where are we? And the other courses, the FINRA, they're doing the 6. I don't think they have questions yet. I think it's mostly the book, which is great. Yeah, there. And oh, look at that. They don't have questions yet. So they're really just, they have the book so far. So good stuff. Okay. Back to my other courses, 6, 7, 63, 65, 66, the GRE, the USMLE, I don't, was there some sort of medicine thing, and other ones. They do a lot of tests. It's good stuff. But we're going to jump back and go back into the SIE. Here we go. This is it. We got this. We're going to go to the dashboard. It tells you how long. It costs a lot of stuff. They have links where the heavy stuff is. It's all good stuff. Okay. Let's do this. Let's jump to the practice exams. Practice exams are the finals. You can take they have 25 of them, and they have a lot of, and they do, they explain that they change the exams a little bit once you take one. Oh, this is interesting, right? So my summary for the last 3 exams is 80%. I was doing it with students. But look at that. If you have some sort of problem, you can actually do some of your troublesome questions, things you're getting wrong consistently, which I like. And then the more you get wrong, the more they find, the more they come out with you. Pretty cool. Pretty cool. Okay. Okay. So here we are. We got the SIE exam. We're going to give it a shot. Let's go. Let's get on this, baby. It's creating an exam. Here we go. 105 minutes. Okay. Number one. Which of the following debt securities accrue interest on an actual 365 basis? Okay. So let's talk about that. Which are actual 365? 5-year treasury note, maybe. Okay. A debenture, no, that's corporate, so they're 3360. A revenue bond and a geo bond, they're all munis. So remember, munis and corporates are 3360 T plus 2. And treasuries are actual 365 T plus 1. So it's got to be a treasury note. Won't be a treasury bill, treasury note. I like that. Okay. Broker dealers must maintain certain books and records according to financial rules and regulations. Which of the following records require a lifetime retention period? Okay, so we're going to talk about this. Now, remember, what we're going to do here, just remember, this is the big thing. We are going to make sure that we press pause each time after a question pops up so you can get it yourself. Okay, good stuff. Okay, broker dealers must maintain certain books and records according to financial rules and regs. I think, which of the following records require a lifetime retention? Okay, lifetime retention. Okay, so let's see. So new account forms, it sounds like a 3-year deal. Trial balances sound like a 3-year deal because that's all about, most things are 3 years. Trade blotters, remember, so for 6 years, it's big sacks, right? Santa carries 6 big sacks. Blotter, BG, blotter, general ledger, stock record, customer information, and statements. So that's all going to be 6 years. So I got to think the answer has got to be stock certificates. Certificates, remember, stock certificates of the company, not others. Good. I like it. When a bond is purchased at a discount, that means it's below par. That means we're going to go coupon, current, yield to maturity, yield to call. So let's find that. Current yield is higher than yield to call. No. Yield to maturity exceeds yield to call. No, because yield to call is the highest. Current yield exceeds yield to maturity. No. And so yield to call equals yield to maturity. It has to be because it's coupon, current, yield to maturity, yield to call, coupon, current, yield to maturity, yield to call. Let's move it on. Which of the following is forbidden in public, verboten in public communications? Sending a letter to a client without pre-approval. Okay. Discussing general investing principles online. Okay, that's usually okay, general shit. Comparing a product to the S&P 500, well, that's kind of a thing. And rebate offer for poor investment. No, so if you do a shitty job, you cannot just give them their fucking money back. Okay, we're going to go with that one. That's no good, a verboten. Which of the following retirement plans is a qualified plan? We have qualified or unqualified. Qualified means it's sponsored by a corporation. It's pre-tax. They have no discrimination. They have vesting rules, all that shit. So let's go through it. Traditional IRA, no, because that's sponsored by you, yourself. A Roth IRA, again, that's sponsored by you. Deferred comp is more for the big dicks, the big swinging dicks at your firm. So it'd be a Roth 401k. I would think that might be it. So let's think about that for a second. Which of the following retirement plans is a qualified plan? Traditional IRA, nah, that doesn't work. A deferred compensation, Well, so the traditional IRA and the Roth IRA are both self-sponsored, so that doesn't work. A Roth 401k, we'll come back to that. Deferred compensation is for big swinging dicks, so I think that doesn't answer. So remember, qualified plans are sponsored by corporations. Non-qualified plans could be with the corporation, but for the most part, they're not protected under ERISA. They don't have all those vesting, non-discrimination rules, stuff like that. So I'm going to go with what's a qualified plan. I'm going to say the Roth 401k because 401ks are qualified and sponsored by corporations. Now, what's interesting, if you do a Roth 401k, what happens is set it up yours and your money goes in after tax. But at the same time, the match part, the firm sets it up for you and puts it in at the same time. Okay. And that part, they're going to set up a separate IRA that goes in pre-tax for you. Which of the following best describes a debenture? A debenture. Okay, so now a long-term unsecured corporate bond. I like that, but let's see. A short-term unsecured corporate bond. A long-term secured. No, because debenture means unsecured. A short-term secured. No. So out of the four choices, I think a long-term unsecured corporate bond is my answer because I can't go with the other ones. Good. Two clients of yours own a joint tenants in common account. That's a tick. Together on running a pyramid scheme. No, running through various scenarios to determine what can and can't be done in the account. Which statement is true? If a death occurs, the decedent's estates receives the assets. Okay. Mail must be sent to all parties. I don't think so. A trade must be approved by both parties. No. Checks can be mailed to any owner. I think it has to be to both. So let's going to say if a death occurs, the decedent, decedent is fancy words for dead person, the estate gets the assets. And that's true. So if you're part of a tenants in common, you and me, and I get hit by a bus, what happens is my portion goes to my estate, my children, my heirs, whatever it is, it doesn't go to you. Unlike a right to survivorship where it does go to you. Good. I'm going to go with that one. An investor attempts to sell a thinly traded stock, but cannot do so without significantly dropping their asking price. Okay, fair enough. What risk does the investor face? Okay. Drink of the gods. Okay, now, is it business risk? No, because business risk is more like, they fuck up, shit like that. Financial risk, just losing your money. Market risk, that's if the whole market crashes, like when Russia attacked Ukraine or when we shut down the world on March 13th, 2020. So this is liquidity risk because it's a thinly traded stock. The fact that it's not that the company's doing bad, but because there's not a lot of buyers and sellers, it's going to be hard to sell. So liquidity risk. Indications of interest are binding on. Okay, so an indication of interest is what? That's the thing we do during the 20-day review. Okay, you can get indications of interest. You do a red herring, blue sky, the issue, due diligence. You could do a tombstone. But the big thing is the syndicate cannot accept money or orders or any of that shit. And it's not binding on anyone. So indications of interest are just, hey, I kind of like the stock. I would like to buy these amount of shares. And you probably won't get them unless it's a shitty deal. So we'll say it's neither the firm nor the customer is it binding on. I like it. Okay, a client seeking a DPP, which is limited partnership investment with high risk, but also high potential for return, rolling the dice, speculating, would like to invest in which of the following? Okay. So is it income well? No, income is pretty safe. Stripper wells, that's where you go after you pass. No, I'm kidding. I would never do that. Developmental wells, no, that's kind of in the middle. And then we got wildcat wells, wildcatting. Wildcatting and exploratory mean the same thing. They're high risk, high reward, because what you're doing with a wildcat is you're drilling where there's no oil, there hasn't been oil already. So you are taking a chance. Okay. Accrued interest on a corporate bond is calculated on what basis? So corporates are 3360 and treasuries are actual 365. So let's find this. 3360. Boom. There we go. We love it. What is the resulting position for a 2-for-5 reverse stock split if the starting position is 600 at 1380? Why do they have to give such hard numbers? I can't do this kind of fucking math. What the hell? Come on, Brandon. Ooh, that sounds like something else I'm not going to say. Now, Okay, so a 2 for 5 reverse split. So first thing, doesn't matter forward or reverse, just do the same thing. You're going to take, I'll do a little drawing here, see if I can do it this way. I'm going to do 2 divided by 5. I don't know what the hell that is. So I'm going to do 2. Use a calculator for everything, people. So that gives you 0.4. That's your multiplier. So I'm going to take 600 and multiply times 4. 600 times 0.4 is me 240. Now, usually, remember, so here's the thing. Once you get that, half the time you get the answer because I see the answer, but let's do the rest. So then you're going to do 1380 divided by 0.4. 1380 divided by 0.4 equals 34 and a half. So this is obviously the answer down here, but just keep in mind, sometimes all you need is the 1, and then if only 1 works, there's your answer. Cleared it out, do this, boom, 240 at 34.50. That is our answer. Remember, you always divide the first by the second, whether it's a forward split or a reverse split. I'll try to put a link in here. Forward or reverse split doesn't matter. You do the first by the second, you multiply times the shares, and you divide from the price. The multiplier, good stuff. When cold calling a potential customer, what must a register rep disclose? The phone number they're calling from or the physical address. Yeah, fair enough. Their name. Hey, hi, my name is Johnny, and the firm they work for. I gotta think. I'm feeling an all of these, okay? Because you got to tell them. Because here's the thing. I know they have to say these two, so yeah, they got to give that one too. Even though everyone has caller IDs, you know who they're calling from. So in other words, no blocking your number. Okay. Bonds experiencing liquidity risk experience which of the following sets of characteristics? Liquidity risk means it's thinly traded, not active, so I'll look for that. So let's go active trading, out. Okay. Inactive trading and lack of demand. Okay. I like that one. Let's go to inactive trading and surplus of demand. No, if there's a lot of demand, it's not liquid, so throw that out. Active trading, no, that doesn't work. So it's either inactive and inactive. So the lack of demand is where the liquidity risk, because you try to sell your shit and you just can't. A customer is interested in opening a trust account at your firm and intends to utilize margin on the account. Okay. What statement is true? Okay. Now, this is prohibited unless the beneficiary is suitable. Okay. This is always allowed if the margin application is accepted. This is prohibited unless explicitly, can't say the words, approved in the trust agreement. This is prohibited always. I mean, there's very little things that are prohibited always, okay? So I'm going to go without that. So I'm going to go with the trust can do a lot of things as long as it's explicitly approved in the trust agreement. Watch, I'm going to get hammered on that one to be wrong. But I'm going to go with the yes. I'm not a fucking lawyer. All of the following will create a tax reportable event except. So which one of these will not create a tax reportable event? Capital losses, yeah, I can take the loss, right? If it's a realized loss. Interest, anytime you get fucking paid, you're paying taxes. Dividends, again, anytime you get paid. Remember, and even if you get paid, and even if you reinvest that shit, you still got to pay on it. Remember that, because that's going to pop up on the exam. And stock split. Stock split is just getting more shares worth less. That's not taxable. Much like a stock dividend is not taxable. I'm going to go there. Stock split. That's the answer. If a company wants to sell stock to the public, they will hire an attorney. No, they will hire a credit union, investment bank, mutual fund company, or commercial bank. So who helps a company go public? Investment banks. That's an easy one, okay? Investment banks are the ones who help. They help bring them public. They help set everything up, and then they start building the book, allocating it, and selling it. Good. So that's the thing. So on the FINRA practice exam, there's a question that says, what's the main job of a syndicate? And everyone thinks it's to get indications of interest. That's not their job. Their job is to sell the fucking thing. So their job is to build an order book and allocate the stock. Getting indications of interest is how they get there. But just getting people interested is not the job. The job is to sell the fucking thing. Okay. So bottom line, investment bank. Charlie sells, I'm dating myself, sells one Verizon Gen 85 put at 8 when Verizon is trading at 89. Verizon stock falls to 74. Charlie is assigned the put, then sells the shares in the market. Charlie has a gain or loss of, let's see. So Charlie has a break even of what's 85 minus 7? Let's say 78, right? So let's see what it is. 85 minus 8 is 77. Boom. Okay, so it goes to 70. That's a break even. And you are bullish, so you want it to go above that. Since it goes below, what's going to happen? So right away, we know since it went to 74, the distance between the break even and the market price is 3. And since we're bullish, it has to be a loss because it's down. But let's walk through the process. Goes to 74, gets assigned, which means Charlie has to buy the stock at 85. Then he sells it at 74, loses 11, but $7 loses. What did I do? So he sold, so he loses 11, but gets 8, right? But he has 8 in his pocket, so he loses 3, right? So we buy it at 85 because we have to. We sell it at 74. That's an $11 loss. We have $8 in our pocket, so we lose 300. There we go. Growth companies tend to exhibit which of the following characteristics? High PE, high acid test, high dividend payout, and high current ratios. No, because growth stocks don't really pay dividends, so high dividend payouts out. High current ratios and high acid tests are kind of the same thing. That's really just whether they have, if they're liquid or not. So I'm going to go with high PE. Growth stocks have high PE and low dividends, and value stocks have low PE and high dividends, or they have dividends in general. What's the maximum loss on a long put? Okay, every time I buy an option, the max loss is what I paid, folks. Every time I buy an option, long means buy, long, own, hold. They all mean the same thing. If I buy an option, the most I could lose is the premium. Boom. And the most I could make is strike minus premium. Okay. Peyton Manning has a $100 par, 8.1% preferred stock outstanding. Dividend rates for the new issues fall to 7.6, so the rates went down. Which of the following is most likely the current market price of the preferred? Okay. Without doing the math, I could probably get it, right? So you have an 8% preferred and the rates go down to 7. So now it's a premium bond. So there's only one premium. So it has to be the answer. Because look, it's not par because it's already down low. The price doesn't go down when the rates go down. Because think about it. If you have an 8% bond and rates go down to 7.6, that means the new bonds being issued are coming out at 7.6, which is paying $7.60. When you're getting $8.10, yours looks fucking good. So the price is going to go up because it's more attractive. So as rates go down, prices go up on preferreds and bonds. And as rates go up, prices go down. So I'm going to say it has to be the only premium one there. Sometimes they'll do that for you. It's great. Okay. A hedge fund, billions, Axe Capital is considering a significant investment in a publicly traded company in hopes of a hostile takeover. Which of the following actions will they likely pursue? So file a complaint? No. Attempt to call the common stock? You can't call common stock. Request a vote of confidence? No, you would request a vote of no confidence. And it's extended tender offer. So a tender offer isn't a limited time. It has to be at least 20 days. It's an offer to buy the stock. So if I think IBM's trading at $50 a share and I think it's worth 60 or 55, I'll say I think it's worth 60. I'll go out and say, I'll do a tender offer and say, I'll buy up to 10 million, 20 million shares at $58 a share. So anyone who wants to sell their shares to me can. So I'm making a tender offer and anyone who wants to sell their shares can tender their shares to me and I'll pay them $55 a share. That's a lot of ways how companies get taken over. So it's a tender offer. It has to be open for at least 20 days. In a fixed annuity, market risk is assumed by which of the following parties? Market risk. Let's see. So I have a fixed annuity, I have market risk. So fixed annuities have a set payment. Don't go up and down. I'm not really invested in the market. I'm guaranteed a payment every month. So I'm not taking the market risk. So I have to think the insurance company is taking it because whether they make money or not, they have to pay me. If I'm talking too fast, slow my ass down. It is 12:30 at night on a Saturday, and this is what I'm doing. A 16-year bond, which is callable at 8 years at 103, has a 4.7% coupon and is bought at par. What is the order of the yields from lowest to highest? So here's the thing. I bought it for par. You're not getting me on that one, Brandon. You got me once before. You're not getting me again. It's going to be none because you bought it at par. Remember, a bond at par, all yields are the same. Got to be none. All of the following securities issued by the US government except treasury bonds, yeah. Strips, yeah. T-bills, yeah, they're all treasuries, plus bills, notes, bond, tips, and strips. Treasury stock, even though it sounds like it, but it's not. Treasury stock is when a company issues shares and then they buy them back. That's treasury stock. That reduces the outstanding. Issued minus treasury is outstanding. But remember, once it's been issued, it's always been issued. Even though treasury stock was bought back, it's still considered issued. A sales charge assessed on the sale of a mutual fund is known as a, See, I'd like to lean toward redemption fee because it sort of is, but that's not the answer. It's going to be a CDSC. So a contingent deferred sales charge. So the way that goes is if you have Class A, you pay when you go in. It's a front end charge. You don't pay commissions on this shit. Class B has a contingent deferred, which means every year that you own the bond, the mutual fund, you'll pay less of a contingent deferred. And usually after 5 or 6 years, it's waived because it's all gone. But if you sell it before that, you'll have to pay a contingent deferred sales charge because you're paying on the back end, B for back end. So it's got to be CDSC. Seneca, age 86, does not take a distribution from their traditional IRA. What is the consequence? You lose half. Okay. Because the required minimum distribution is 72. You can still put money in if you're working and all that, but you have to start taking out at 72 or the April 1st after you turn 72. And whatever you were supposed to take out and don't, you get a 50% penalty. So take the fucking money out. Several reps in a firm's trading department are accused by FINRA of trading ahead of research. Which of the following best describes the accused action? Creating an unnecessary middleman, that's interpositioning, that is a violation. Purchasing shares prior to a large customer order, that would be front running. Placing customer trades for securities prior to doing the necessary research. No, I mean, you can do that. If you haven't done the research, that's just kind of dumb to buy without a research. Placing a trade prior to the issuance. So a research report comes out, it's not published yet. You kind of read it and go, wow, it's going to move the stock up or down. And you take advantage of that. So placing a trade prior to the issuance of a research report is trading ahead. Contributions to a traditional IRA may not be tax deductible in what situation? Customer has no workplace retirement plan and substantial income. So I'm just going to say what this is and we'll find the answer. You can always put money in an IRA. There's no limit on that. But if you have a corporate plan at work and you make a lot of money, then you can still put money in, but it's not deductible. So let's find that. So it has to be someone who has a workplace retirement plan. So it's either the bottom two and has substantial income. There it is. He makes a lot of money. She makes a lot of money. There you go. When may interest rate offerings be resold to another state resident? So that's a tricky one, right? Because that makes you think, oh, it's a 6-month hold. That's what I wanted to jump on. Because it can't be sold outside the state under Rule 147. Rule 147, you buy it, it has to be held within the state for 6 months, and then you can sell it anywhere you want. But you can sell to another person immediately. I think sometimes they say 90 days, but that rule's gone. Which of the following investment profiles is most suitable for Class A mutual funds? Which of the following investment profiles is most suitable for Class A? I always say a lot of money long-term. So let's find that. 15, 11 month. No, that's short. That'd be Class C. And you probably shouldn't. You should be doing money markets. 120 invest in a 2-year time horizon. No, because you're not going to make up for the, you're better off in a Class B maybe. 9,000 to invest 6 year. That's better, but it's still only $9,000. Maybe B is better for that. 225 to invest, you're most likely going to get a break point and a 20-year time horizon. That's the one I like. Class A, a lot of money long-term. Because remember, yeah, Class A is eligible for break points. So the more you put in, the lower sales charge you pay. So a lot of money. All of the following are publicly traded companies except Fannie Mae, Freddie Mac, Sallie Mae, all used to trade them when I worked on the stock exchange. So Ginnie Mae is the answer. Boom, because Ginnie Mae is government backed. All of these used to trade on the exchange. I think it was post 13 or whatever. We should trade them like crazy. And then after the crash, boom, they're gone. Okay. A 16-year, 3% bond is callable at 108 in 3 years and is trading at 92. The bond is trading at, well, none of the other shit matters. It's trading below par. It's a fucking discount. That's an easy one. Boom, move on from that question. Cleo is looking for, do you remember Cleo? She used to do those nighttime readings. Like she got in trouble because I think she used to be a psychic. Okay. Cleo is looking to sell 400 shares of a publicly traded fund, which is a closed-end fund, with an NAV of $44.95 and a market price of $47.88. What will Cleo receive for the sale? So she's going to sell it at the market price. And if they give you bid ask, she sells at the bid and buys at the ask. So she's going to sell it at $47.88 minus a commission because it has to come out. So let's find $47.88. So we got to do the math here. Bastards, make me do math on this late night. Okay, hold on. 400 shares times 47.88 is 19,152 minus a commission because you're going to get less. You have to pay the commission. Boom. Okay. If traded regular way, how long does it take for a corporate bond trade to settle? So everything is T+2 except for two things, treasuries and option trading. That's not either one of these, so it's going to be T+2 after the trade date. Now pay attention, guys, because sometimes they'll put after the settlement date, and that's not the answer. So just make sure it's 2 business days, not 2 calendar days. That's where speed kills, right? Okay, it hurts you. As part of the shelf registration rule, the blanket registration formula S4. So under the shelf, which you file an S3, remember S3 for 3 years. That's the best way to remember it. S3 for 3 years, baby. Limited partners, by the way, a shelf offering, I want to go back for a second. A shelf offering is when you file your registration statement. Big companies do this. And then they have up to 3 years to issue the shares. There you go. They don't have to do it right away. They can wait up to 3 years. They can put it out in piece. They can do half and half, do whatever they want. They have to up to 3 years, I can't speak, to sell all their shares. Limited partners and a limited partnership, I can't read sometimes, assume what type of liability? So limited partners have limited liability. General partners have general liability, which is fancy for unlimited. So we're going to go limited partners and a limited partnership have limited liability. They can only lose what they put in. Okay. Bond rating services like Moody's evaluate bonds based on what risk? Default, market, interest rate, call risk. Okay, so market risk is like interest rate risk, really. I mean, it's not. They try to say bonds don't have market risk, but if interest rates go up, the bonds go down. So interest rate risk is a thing, but they don't. That's systematic, so we can't put that in the Moody's. Call risk is that if the rates go down, they're going to call the bond. That isn't it. So Moody's and S&P, when they do the credit ratings, it's based on default or credit risk. Remember that. AAA, AA, triple B are all investment grade, or Moody's is A, 2 little A's, A, little A, or BAA. Those are all investment grade. Anything below triple B or BAA is considered junk, speculative, high yield. Okay. So am I rambling? The answer is default risk. Okay. Which will following investments could justify a higher than average PE ratio? So we're thinking growth company. Oh, I just handed it. Utility, no. Utilities they're consistent. They're not very wild. They're speculative. They usually pay a high dividend because they know what they're making every year. So that's out. Defensive, no. Defensive are things like pharmaceuticals, cigarettes, alcohol. They're steady as she goes. They underperform in a good market, but they overperform in a bad market. They're just staples people need all the time. So that's not going to be high PE. A value company, I already said, has a low PE, high dividend. So a growth company has a high PE, low dividend. They're riskier and they're more volatile. What is the maximum loss for the holder of a call? So if I hold means buy. So if I buy a call, the most I can ever lose when I buy an option is what I paid. So it has to be a premium. Good. Which of the following is the act of depositing and withdrawing funds right below reporting requirements? That's why if you see Billions or The Sopranos, they always try to do this where they put in 9,900. Every fucking bank knows this. And you put in 9,900 2 days in a row, you're getting a fucking SARS. So it's called structuring because you're trying to put it just below the number. money, it's not money laundering, but they could think that. But bottom line, structuring is trying to put deposits in just below the $10,000 reporting thing. Okay. Reg SP, super privacy, was created to protect which of the following? Market manipulation? No. Investors from bad investments? No. Unethical practices from register rep? Nah, that's just, it is what it is. Non-public information on customers. Reg SP is to protect the customer's information from being shared unnecessarily or without their permission. Unless it's a subpoena or a regulator needs to see it. Good. Poet sells short 200 shares of Exxon ExxonMobil at 55 immediately after opening a margin account. At the end of the day, Exxon is trading at 40. Poet must deposit. I don't care where it went. I care where I did it. So I have to figure out 50%. So I got to do 200 times 55, not the 40, 11 grand. Again, calculated times 0.5. Double nickels, baby. I got to put 5,500 in. Okay. So it's always 50% of what you initially do, not where it went. Good, it went for me, went up. He made a lot of money. What is generally forbidden with muni debt? Non-residents purchasing bonds? No, it's just depending on what the rate is. It's not the smartest. Arbitrage is always okay. Insurance, they have bond insurance. Now, here's the thing. It's not forbidden to short sell muni bonds. It's just dumb because they're so illiquid. It's going to be hard to cover your short. So it's not that it's forbidden. It's just don't do it because it's stupid. Kind of like putting a muni in an IRA. Not a good idea. Okay. Channing sells one BCD Gen 35 call at 4 when BCD is trading at 36. Stock rises to 52. Channing has assigned the call. That means Channing has to sell the stock at 35. So the stock went to 52. My break even is 39. Now, since I shorted a call, sold the call on bearish, I wanted to go down. The most I make is 4. The most I could lose is unlimited, but let's do this. So the stock went to 52. I have to buy it at 52 and then sell it at 35. So I lose 17, but I do have $4 in my pocket. So I'm going to lose 13, but let's do my way, the other way. Break even is 35. Since it's a call, it's strike plus premium. So my break even is 39 and I'm bearish. So I want it to go below 39. Anything above 39 is a loss. So 52 minus 39, there's your $13 loss. Just find the break even and get the market price compared to that. So it's a $13 loss. How is inflation like now? 7-8% a year. How is inflation measured by the U.S. Bureau of Labor Statistics? They use GDP? No. They use SARS or CTRs? No. SARS is a suspicious activity report. That's if you think somebody's doing something wrong. A CTR is whenever you have cash or cash equivalents going in or out of 10 grand or more. So the answer is CPI, Consumer Price Index. It's just matching the cost of certain goods month to month, and that determines inflation. And that's why if you're watching this in March, or oh God, it's fucking April 2022, you're watching the Fed raise the rates like 50 basis points at a time to try to curb inflation. Probably won't work, but we'll see. Jayla Smith, not Jade Smith. Okay, not slapping, having Will Smith slap Chris Walk. Jayla Smith is hired by XYZ Brokerage Services, a local broker dealer in her town. This is her first job in the financial industry, and she's overwhelmed with the onboarding process. Which of the following statements is true regarding the registration process Jayla will be subject to? Okay, well, U5, I hope not she's going to be U5 because U5 is when you get terminated. Passing the SIE exam does not automatically register Jayla. Well, that's true. She only must disclose felony convictions, no misdemeanors too of securities related, so that's not true. Any employee records related to Jayla must be kept on file for at least 6 years. Now, I'm never good with the numbers. I'm never good with record keeping. I always suck at that. I always think everything's 3 years, but let's see. So it's not a U5. Employee records, I think, are 3, not 6. She almost disclosed felony. No, she has to disclose felony convictions and any securities related misdemeanor convictions. And so the answer, the true is passing the SIE does not automatically register Jayla. Yeah, the SIE is just set up for the 7. And guys, you don't have to take the SIE first. You can take it after. Goldman does that with a lot of people. Okay. Purchase power risk falls in what category of risk? Well, I don't think it's business or liquidity, so I'm going to throw that out. Is it non-systematic or systematic? So systematic is across the board. You can't really diversify your way out of it. And I'm going to have to say, I'm not going to say it's non-systematic because that's business risk. I can't diversify it away. So I'm going to go with systematic risk. System of a down. There we go. Broker-dealers must maintain certain books and records according to financial rules and regulations. Which of the following records requires a 5-year? I always think 5 years AML shit. Okay, so new account forms, no. Blotters, that's 6. U5, no, that's 3, I think. So I'm going to go with SARS because that's all about the money laundering and committing crimes. I'm going to go with SARS as 5 years. SARS for 5 years, Bob. Okay. A register rep has a very busy tax season and mistakenly misses their FINRA administered continuing education. What statement is true? They must retake their license exams? No. Their license is suspended? No. Their license is revoked? No. They cannot function as a rep. They're called CE inactive. Perfect. A 19-year 6.6% bond is quoted with a 9.2% yield to maturity. Which of the following statements must be true? So this is a 6% coupon with the 9% yield to maturity, which means the yield to maturity is higher than the 6. So I got to think that if you look at my triangle or teeter totter, whatever the fuck you want to use, it's got to be a discount. If the yield is higher than the coupon, it's got to be a discount. Where are we? Boom. Which of the following statements regarding Roth IRAs and 401ks are correct? Okay. Roth 401ks are subject to the 5-year aging period. I think all Roths have that. We'll come back to that. Roth 401ks are not subject to RMD. No, any kind of 401k has an RMD. Roth IRAs are subject to, no, a Roth IRA does not have an RMD, just like a variable annuity. Non-qualified annuity doesn't, nor does a Roth. Both are considered qualified. No, just the Roth 401k is qualified. So I'm going to have to go with the whole 5-year aging period, which just means to start taking the money out where you don't pay taxes on it, it's got to be in there for 5 years. If a customer places an order to sell securities they cannot deliver, the trade must be marked short. Okay. So I'm just going to say that. So even if you own the shares, but you think you won't be able to deliver them on time, you have to mark the order short so they can get a borrow so they can deliver it, because failed to deliver is when you don't deliver the shares, and that's a big fucking deal. Which of the following statements regarding UTMA accounts are false? Contributions are revocable gifts. No, that's true. Taxes are reported under the minor's Social Security number. That's true. It is considered a fiduciary account. That's true. Withdrawals may be taken by the custodian to pay for the minor's clothing expenses. Huh. Which of the following statements regarding UTMA accounts are false? Which one is not true? Contributions are revocable gifts to the minor, potentially subject to gift taxes. Yes, because if you give more than 16, they might have some taxes to you. Taxes are reported under the minor's Social Security number. That's absolutely true because they pay the taxes. It is considered a fiduciary account. I'm just rambling. Fiduciary account. Yes, it is, because it's the trustee, the custodian watching it. Withdrawals may be made by the custodian to pay for the minor's clothing. So let's think about that. So I think the way it goes is UTMA, you can take the money out for necessary shit, but you can take it out for unnecessary shit like summer camp and shit like that. Interesting, right? Computers, maybe. It's an interesting thing, but that's the whole point, is that's the true statement. It can't be withdrawn for necessary items. Very weird. A fund investing in securities solely from the Middle East would be considered which of the following types of fund? Special situation? No, that's like mergers, takeovers, bankruptcy, shit like that. Growth and income? No. Balance, that's like across the board. So it's going to be a specialized fund, and it's got like a Middle East fund or something like that. Good. All of the following will occur during an exchange with the same fund family except. So new cost basis? Yeah, because you bought new shares. A tax event? Yes, because you sold and bought, and you bought and sold. If you leave one fund to go in another inside the family, you are going to pay taxes, because if you sell, well, you might be paying taxes if you sell it for more than you bought it for to get the new one, right? So if you're in the growth fund and you buy it for 10, and then you're running into an income fund in the same family, and say you sell the growth fund for 13, you're going to owe taxes on the $3. And then you go back into the new fund, you create a new cost basis. Okay. So, so a realized gain or loss, that's true. And you're not going to have to pay sales charge. If you stay in the same fund family, they have an exchange feature, something like that, and you don't have to pay a sales charge. Lake, some good names. 4,000 bonds, 14%. Treasury bonds at 89. How much will they receive at interest payment? So let's do this. So I love these things. So it's 4M. M is 1,000 in a world. That's not a million. So that's $4,000 times 0.14, 560. Since it's each payment, not total year, you divide it by 2. It's got to be 280. Okay. So the whole point, it doesn't matter where you bought it, the coupon, it says how much will you get, it's based on the coupon. And if they say each payment, they mean how many payment. Each payment is semi-annual, so it's got to be the half of the full. So it's got to be 280. If I'm wrong, if I'm lying, I'm dying. Okay. Which of the following best describes call protection? A non-callable bond? Okay, sort of. Rebate earned when a bond is called? No. The amount of years before a bond may be called, we'll come back to that, and the amount paid above par. So the amount paid above par to call the bond is called premium. A non-callable bond is straight up just a non-callable bond. The amount of years before a bond may be called, that's call protection. So if you see a bond and it says it's callable in 2030, that means it can't be called for the next 8 years, since it's 2022 right now. That's 8 years of call protection, because in the indenture, it'll say how soon we can call it. And before then, it can't be called. So that's call protection. So I'm going to go, call protection is the number of years a bond cannot be, before a bond can be called. I keep wanting to hit the flag button. The second market is part of what? So we have the first market, we have the primary and the secondary market. Primary market is new issues, syndicate, IPO, shit like that. In the secondary market, we have 4 markets. We have the first, which is the exchanges. Second market is over-the-counter securities and bonds, pink sheets, bonds, shit like that. Third market is where listed securities trade over the counter. So like IBM trades on the New York Stock Exchange in the first market, but it alternatively trades over the counter in the third. And then the fourth market is like institution to institution order matching, ECNs, dark pools, shit like that. So the second market is the over the counter, which means it's in the secondary market. Could they be more confusing, right? Okay. Which of the following are true about frozen accounts? Let it be. What is it? Let it go. Okay. Customers may not purchase securities. No. Customers may not purchase securities for 90 days. No. Customers may not purchase securities for 120 days. No. Customers may only buy securities if cash is in the account. Right. So here's the deal. A frozen account means you're free riding or didn't pay for your shares. So they sell your account, get your money, and freeze your account for 90 days. What does that mean? Not a whole lot. It just means that if you can still buy, you can still buy on margin, but they won't do it unless what you have to deposit is in the account. Because remember, under Reg T, you technically get 4 days to deposit money. Whoa, blow my mind. Regular way settlement is 2. So if I buy stock on Monday, the broker dealers will settle on Wednesday. That's the 2. I actually have, but under Reg T, until Friday to deposit the money. If I don't, they get an extension, or I ask for an extension. They give it to me. If I don't pay by then, they freeze my account out, which just means if I'm going to do trades, I have to pay for it up front. I no more 4 days, but that most broker dealers make you pay up front anyway. The Securities Act of 1933 legislates which of the following? Third, first, second, primary. It's not, don't jump on the first market. It's the primary market. I wonder how many I got wrong, because I'm going fast, and that's when I make my stupid mistakes. Okay. In a trust account, the person responsible for initially funding the trust is called the custodian. No, that's who takes care of it. The trustee, the custodian has nothing to do with the trust, therefore for fiduciary accounts. A trustee manages a trust account for the beneficiaries. The beneficiary is the one who's the beneficiary of the account. So the grantor is the one who sets it up. I think they could be called a donor too. Okay. An investor purchases 20-year strips, long-term zeros, directly from the U.S. Treasury. How often will they pay taxes on interest? Here's the tricky thing. An OID you must accrete. OID you must accrete. So you're not getting it anything to the end, but you have phantom income because you have to accrete the value. You won't have to do the math on this exam, but you have to understand that zero coupons you accrete every year, which means you're paying taxes. Now, if this is a muni, I wouldn't pay any because that amount, the accrete is considered interest income. So it's taxed at ordinary income. So on the strips, you pay federal, but not state on it. And if this was a muni, you'd pay state, but not federal. So I'm going to say it's going to be annually because it accretes. I could be wrong. What is a rep's responsibility if they suspect elder abuse by a customer's children? Beat that child. Restrict a customer's account until resolved. Get in touch with the children. Report the issue to FINRA. Escalate the issue to a supervisor. I'm always torn on this. I'm going to say you restrict the customer's account until resolved, and then you escalate to a supervisor. I could easily see escalating to a supervisor. I could be wrong on this, but a lot of times what you do is you freeze it and then you talk to the supervisor. But I'm going to go with that and see what happens. We're rolling the dice here. Ooh. Long one. Let's try to stay awake for this. A registered rep receives an email from a colleague regarding the release of an upcoming research report on a stock. They learn that firm is issuing a strong buy recommendation on the stock and are certain the market price of the security will rise when the report is released. The rep places a trade to purchase a small amount of shares. No one will notice. Just a few hours prior to the research report being published. Prior to is the problem. What prohibited action took place? They are trading ahead of a research report. So let's go. Front running is front running a customer order. Technically, FINRA allows that for the research report too. Backing away is when you make a quote and don't honor it when the person tries to buy or sell from you. Interpositioning is adding a broker dealer or somebody else in the middle of the mix when it's not needed. Trading ahead of a research report is the enter. Where's the freaking mouse? Jeez. Trades of what type of securities occur in the fourth market? Okay. Unlisted securities trading over the counter. No, that's the second market. Listed securities trading over the counter. That's the third market. Listed securities trading on the exchanges. That's the first market. This is easy. Institutional trading. Again, I can't find the damn mouse. We're getting near the end, babies. I think I did this way too fast. Broker dealers must maintain certain books and records according to financial rules and regs. Which of the following records require a 3-year retention period? I'm going to go with on a whim, I'm going to go with U4s, okay? CTRs and SARs are AML, so that's 5 years. I think stock certificates are lifetime. So I'm going to go with this one, U4s. Let's find out. Ooh, we're getting near the end, babies. Okay. How close to the end are we? Let's see how far we are. Oh, I still got, it's either stops at 70 or 75. Let's find out. Which of the following statements regarding securities transactions and trading capacities is true? So this is the broker principal thing. Remember, A, B, C, PDM, agent, broker, commission, PDM, principal dealer markup. Brokers operate in an agency capacity, earning a commission. That is true. Brokers operate a principal. No. Dealers operate an agency. No. Dealers operate a principal. Boom. So it's got to be uno and 4. Okay. 1 and 4. In the event of a broker dealer's failure, SIPC insurance can be utilized. How much coverage does a customer receive if they have an account with 150 grand in securities and a $45,000 debit balance? Tricky question. So you get the equity amount because at debit, you're the broker dealer, they're bankrupt. You don't have to fucking pay them. So whatever that 155 minus 45. So I'm going to do my magic calculator. 110,000. So it's only the equity. Remember, in a SIPC, it's only the equity, and it's priced at the day that the company either petitions the court or they actually declare bankruptcy. It's not when you decide to claim it. Restricted stock has a holding period of 9 times out of 10. Holding period always means 6 months. Just a freaking thing. Institution trade in the over-the-counter market as part of what market? We're going to go with 1, 2, 3, fourth market. An investor, it's draining when it's like midnight. God, I only took like 20 minutes on this. This is ridiculous. Okay. An investor is researching. Oh, I guess it's 40 minutes. Okay, I feel better. An investor is researching several different stocks for potential investment. They come across the PE ratio for each potential investment and ask for their registered reps' help in understanding this metric. Which of the following statements made to the investor would be considered false or misleading? So they're saying which one would not be a good one. High PE ratios are typically associated with value companies. Okay, boom, fucking A, that's the answer. Well, but remember something, this is a pattern. You have to read everything just in case there's all of the above or whatever. Well-established companies with long track records of profitability tend to have low PE ratio. I think that's true. A low PE ratio may indicate a security is underpriced. Yeah, that's a value company. Businesses, like when I bought the American Airlines and Carnival Cruise and all that shit in the banks, businesses in the early stages typically have high PE ratios. That's kind of true too, because they're not making money. So the price is automatically going to be high. So I'm going to go with high PE ratios or not with value companies. They're with growth. Armory Business Company. You ever get to a point where you just want to get it over with? An Armory Business Company has several issues of preferred stock outstanding. The company has enough capital to call one issue. Which preferred stock is least likely to be called? So remember, whenever they call, they're going to call the most expensive one with the lowest call premium. Just the way they do it, okay? Because they're going to call the most expensive one, the highest coupon, with the lowest call price, because the highest coupon is costing them the most money. So they're asking the least likely to be called. So we want to find the lowest coupon. Ooh, this is a great question. The 9% is killing you, right? So I'm going to go with this one. Maybe I'm wrong, but it's a lower call premium and it is a low coupon. I could see this being it or that, but I still think this is the answer. We'll find out. If an insider holds restricted shares, they are subject to which of the following? Insiders have volume limitations, but no holding period, right? So understand 144 says if you buy Reg D or private placement, you have to hold it for 6 months fully paid. That's that. Then there's no volume restrictions. Insiders, partners, officers, directors, all that shit, they have no holding period, but they have to follow the volume restrictions. And remember that volume restrictions, 1% of the outstanding, the greater of 1% of the outstanding, or the 4-week trading volume 4 times a year, which is every 90 days. So they have volume limitations, but they have, but here's the thing. So an insider holds restricted. So an insider has no holding period, but restricted does. So if you're an insider holding restricted shares, you have the volume limitations and the 6-month hold. I almost fucking fell for that one. That would have been bad at the end. Which of the following speed kills? Which of the following statements regarding preemptive rights are incorrect? So what's wrong? Rights have little time value at issuance. We'll come back to that. Rights offerings are typically connected to additional offerings. That's true. Rights have no intrinsic value at issuance. And one right is provided per share of stock owned. That's true. So what's incorrect? So they do have intrinsic, right? So they have a little time value because they're only 30 days long, but they do have intrinsic. They're issued in the money. So that's a thing. They're issued in the money. So they're going to say they have, this is an incorrect statement. They have no intrinsic. Hope I got it right. 97. What did I get wrong? Got the preferred stock one wrong? Let's find out. Now, since they're all right, I'm just going to jump to the one I can jump. I got 2 wrong. Okay. See, I said that I wasn't sure. You escalated to the supervisor. Boom. I think you could do that and then do it, but I'm all good. Okay. Where's my other? I got one wrong near the end. What'd I do here? See, I don't like that. Wait. Why is it? Because it's a low coupon? I think it's a high premium. Oh, I guess so. Did I really pick that? I guess it's late. I fucked that one up. Okay, that's fair. Because you want to take the one that's going to cost the most. That's fair. I get it. I can go with that one. I'm not going to be too upset about that. So there you go, guys. Those are the answers I got. I think I only got those 2 wrong, right? Let me just make sure. Boom. So that's what I say. I don't know the questions ahead of time. So I hopefully you get something out of the fact that I read it and it's coming at you. Like I'm reacting the same way you might react, and it hopefully helps you process a little bit. Guys, if you like what I'm doing, please check out my live every Tuesday and Thursday night. Have some fun. Maybe I'll offend you, curse a little bit, whatever. Y'all have a good night and wash your hands.